We got some big news for new holding stock investors as the company's management team elaborated on its prospects over the near and medium term. I'll evaluate these developments and what it could mean for new holding stock investors. There's a lot to cover. It's a short video. Let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
New Holdings management team saying that their average monthly RPAC stands at around $11. Our more mature cohorts are already achieving monthly RPAC of $25. First of all, what is RPAC? That's the average revenue per active customer. It stands at around $11, and that's for the total customer base. But if they excluded the most recent customers, then the total would be closer to $25. What that goes to show is that customers that stick around with new holdings become more valuable for the company. They try new products, they engage with the products more frequently, and they generate more revenue for the company. That's a good sign for the millions of new customers they've added in the last 4 to 8 quarters. As these customers mature, the average revenue per active customer will likely increase over the next several years. In fact, that's precisely what management says next. They say they remain confident in their ability to increase RPAC to its full potential over time. I wouldn't be surprised if this trends higher over the next several years. And it's for that reason primarily, but also as it saturates the market in Brazil, there aren't going to be that many new customers left to gain in Brazil after maybe, 8 to 12 quarters. They may focus more so on increasing average revenue rather than attracting new customers because they'll already have so many customers. And then in the new market where it's attracting millions of new customers in Mexico, that rate of increase will likely continue for several more quarters. So that region, as the customers it's gained over the previous 4 quarters, as those customers start to mature, the average revenue per active customer from that region will start rising, although that will be offset by the millions of new customers it's adding. So that market will probably only start to add to the average revenue per active customer after several years. So it's got a primary core market in Brazil where it's already reaching over or close to 100 million customers. And those customers are driving increases in average revenue per active customer. And then the newer markets in Mexico and Colombia will add to the company's growth rate in new customers. So they got that nice 1-2 punch going for the company's growth. So they highlighted their consumer finance portfolio, which comprises of credit cards and lending, was up 47% year over year and 8% quarter over quarter. Lending continues to outpace credit cards and now accounts for 27% of the portfolio. And here's the sentence that I think has a lot to do with why new holding stock price is down in recent weeks. This conference call that I'm going over right now was from mid-November. And if you notice, the stock price has faced headwinds since about mid-November. And a lot of it has to do with this sentence here. We have intentionally slowed the pace of eligibility expansions to more closely monitor performance. What does that mean for investors? So when you're lending and you're generating revenue from your lending business, you're increasing your risk as well because you're lending out money. And if your customers don't repay, that's a loss for the company. And so what New Holdings is saying is that they're going to slow down the increase in lending availability because they want to monitor the performance. They're not 100% sure that their lending models, their decision-making process is where they want it to be. They're not 100% sure. And really, no bank or no lending institution should be 100% sure because you never know with lending in various economic cycles what the performance is going to be because no economic cycle is exactly the same as the previous economic cycle. So if we enter a recession here over the next few years, it's probably not going to be the same as the recession we entered in 2007, 2008, 2009, the global financial crisis. It's probably going to be different in a lot of ways. It might be similar in a lot of ways. So when you're modeling these lending portfolios, and defaults, of course, are most prevalent during recessions. When the economy is booming, you're not experiencing very much default when unemployment is low and people have job prospects. If they lose one job, they find another job. When the economy is booming, defaults are not a concern. It's when you go into a recession that you really find out about your decision-making process in lending, what your default rates are during those times. And so New Holdings is saying, you know what, we're not so sure, and we want to kind of slow down a bit, gather more data to be more confident, to make sure our next step is on solid ground. And this spooked investors a little bit because they're thinking, well, what are they seeing internally that's causing them to make this decision to slow down intentionally? Right. So that's, I think, what's spooking investors. If you remember, when I was, I cover SoFi Technologies, which also makes a lot of lending decisions. And to start the year in 2024, SoFi said something similar to this. This was around, I want to say, December of 2023. SoFi said something similar to this, and they were concerned about the performance of their portfolio. And they said, we're going to slow down lending. And SoFi's stock price didn't react positively to that news. And then as the year progressed in 2024, SoFi's management became more and more confident in their lending model, in their performance of their lending, in the performance of their portfolio of loans. And then they said, you know what? We're letting it rip now. We're letting it go because we're confident now that the performance is stronger than we expected, so we can confidently increase our lending. That's how it progressed for SoFi. Now, that might not be what happens with New Holdings, but that's kind of what they're doing. They're taking it more cautiously in the lending portfolio to observe, to observe. And they go on here to say, if the portfolio continues to perform well, we may resume growth in the near term. So we're gathering additional data to ensure our credit models remain resilient. And there's nothing wrong with that. That's a prudent strategy. I like that strategy, especially if you're dealing with loans that are unsecured, which their lending business, they say unsecured lending remains the main growth engine. And what unsecured means is that there's no collateral. And so if the customer defaults, there is no recourse. You can't go and get your money back by repossessing a car or foreclosing on a home to make yourself whole and make sure that you don't lose all the money that you lent. When it's like a personal loan or a credit card loan and the customer defaults, you're not getting anything back. You're not likely to get anything back. And so you've got to be more cautious in those categories, which is what New Holdings is doing. And I think it's a prudent strategy. I wouldn't be upset with this if I was an investor. I would be considering that it's not great news that they're having to gather additional data on their models at this point. But if they see something that causes them to need to be more cautious and their management is okay with doing that, even though they know that in the near term it would put pressure on the stock price, I like that thinking. I like that long-term thinking. So all things considered, it's neutral for long-term investors, especially after the stock price has already adjusted lower to account for this fact.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.